So this is the first topic that I want to share: market structure. So before we get to the video, we have a big topic to cover on this program or on this training. So the first topic that I will share is market structure. So market structure is at two types. Understand? The market structure is like a phase of the market. Understand how the market moves? The market moves with structure, phase. You understand? When the market moves with structures, when I say structures, it creates higher highs and a higher low on uptrend, while in downtrend it creates lower lows and lower high in downtrend. That's how you indicate your uptrend and your downtrend market. So the structure that we are talking about is that we have two types when it comes to structure. We have break of market structure and we have change of character. Break of market structure is the main structure that tells you where direction. It gives you your direction, either your buys direction or your sell direction, which is your break of structure. While change of character gives you the main. It can give you the main intent, or it can tell you the direction of the market, whether the market is reversing or the market is still going up. So without not wasting your time, I will show you the structure of the market and also the change of the market when we are on uptrend and when the market is on downtrend, how you indicate. So studying this, you need to go to your higher time frame. Understand? You don't trade on your lower time frame. The market structure also shows you indicate. You can also see your market structure on your lower time frame, but higher time frames from day 1 and 4 hours, that's when you start up your analysis. Once you start your analysis, all you are looking at for, check if the market is breaking structure to the upside or if it is breaking structure to the downside. That's the way to approach the market. You don't need to complicate things. So in this program, I will show you this market is giving us this. Here is called a uptrend market. Why I called it an uptrend market is because the market always creates a higher highs, then gave us a low, we chase back, which is the low, and then gave us another new higher highs. Once it gave us a new higher highs, the previous higher highs is broken. Once the previous higher highs is broken, that's when we indicate that the market is still on a bullish trend. When I mean a bullish trend, I mean a uptrend market. Understand? So what do you want to do as a trader? You always want the market to retrace back to create a lower low for you before you can ride the impressive move. Understand? The higher highs structures are always called the impressive move, while the lower lows of uptrend are called the retracement moves, because it doesn't give you that sharp move. It doesn't give you that impressive move to catch a lot of people, while higher highs gives you a good pips. You can see that higher highs, the lower low that creates the higher highs moves sharply, moves in a big move than the lower high in uptrend. So once it's creating a higher high, it's breaking structure. Once the market breaks structure, this is the way you notice. Once it breaks structure, all you need to do is to wait for retracement. So how do you wait for a retracement? Is for you, I don't want to complicate things for you, I just want to give you in a basic way that you understand. So what do you want to do? Once the market is breaking structure, giving us these higher highs from here, higher highs, higher low, higher highs, break of market structure, then wait for your lower low, you ride from here, you buy from here, and then the market goes, create a new higher highs. Understand? Break a new structure, then wait for a retracement, you buy, then take your profit at the higher high, give a new higher low, Understand? Then what do you want to see in the market? We have three phase. We have buyer's phase, we have uptrend, which is the phase 1, we have downtrend, which is the sell side, and we have the ranging market, or you can call it the sideways market. So the uptrend is where the market is moving higher, is creating higher highs and higher low, while the downtrend is where the market is breaking higher low structure, or you can call it breaking lower low structure, creating downside market. Why the ranging market is where the ranging market is when the market isn't moving at any side. It's just going up and down with no direction. So let me just show you how you indicate everything with the help of Fibonacci. So once the market is doing this, let's say you are in the day 1 or you are in 4 hours market, the market has created a higher highs and give you a low. Understand? Create a new higher highs. What do you want to do? You take your Fibonacci from your swing low. You always click once you come to trading view, and just anytime you take your Fibonacci, you click. You can ask me question on how to set up the Fibonacci. Then I will do also a video, for that. That's always the additional content of this program. So you create from your swing low to your swing high for your uptrend. Then what do you want to see? You want the market to retrace. Hope I'm not complicating things. You want the market to retrace. Where do you want the market to retrace? We have from 1% to 100%. The impressive move from 1% to 100%. Then we are waiting for the market to retrace at the 50%. The 50% of the Fibonacci is called the discount price, which is here that I'm drawing. It's called the discount price. And why the 61.8 of the Fibonacci, here is the 61.8 of the Fibonacci, okay, here is called the premium discount price. This is where you find your supply and demand zones, or it depends, you understand, on the retracement. Before you take your confirmation, you have multiple confirmations for entries, which I'm taking you on a gradual process. I don't want to complicate things in this program. So you look out for something here. There is always something suspicious in this area. In around 61.8 or 50% discount, there is always suspicious move, which we call the order block, or you can call it the supply, you can call it the demand zone, because here is your uptrend. On uptrend you buy at demand zone, while on downtrend you buy at supply zones. Understand? You get my point? At demand zones, at uptrend you buy at demand zones, while in the downtrend you sell at supply zones. So you wait for your 61.8 retracement, then you buy. You understand? Take your TP. Either you take your TP at the previous higher highs, understand, which is a sure one that the market will reach there, then, or you take at your last zone, or you can take at the zone depending where your Fibonacci settings give you target TPs, you understand, to take profit. So that is for Fibonacci. I have to delete it. So all you need now is to just, once I'm teaching this thing, after you watch this video, go back and back test, go to your higher time frame, your day 1 or H4, map at your higher highs and your higher low, and your lower lows and your lower lows and your lower high. So this is all you need to do for me. So this is for break of market structure. When I say break of market structure, the higher highs of an uptrend is break of market structure. Once the lower lows break these higher highs, that's when you intend you intend knowing that the market is still buying. Understand? All you need to do is to just, once the market is retracing, take your Fibonacci from your lower low to your lower high, wait for 50% discount or premium price, which is a 61.8, depending where your supply zone is. So this is the starting of this program or training. We still have many topics, both supply and demand, a lot things, understand, a lot things. That's why I organized this for you guys. So this video is documented, because I'm not gonna share this video and it's only for those that paid for our mentorship class. This video is only private. You don't share it out. You keep this video for yourself. Always rewatch whenever you get confused in the market. Rewatch and practice. Also backtest as you moving to your destiny to be a trader. And I pray that you all will succeed in Jesus' name. Amen. So we are moving to the downtrend market. So what do we call when the market is going for a downtrend market? What do you want to know? What do you want to see when the market is going for the downtrend market? You want to see the previous lower high of an uptrend to be broken. Understand? You want to see the previous high. This is the previous higher lows. The previous higher lows of the uptrends to be broken. Understand? Let me say it again. You want to see the previous lower high of the uptrends to be broken by the price. That's when you consider the market is now bearish. Bearish means downtrend. Understand? So if you are like maybe you want to sell the market and you don't know the place to buy or the place to sell, you just wait for the break of market structure. Understand? You can just wait for your change of character. So change of character is always, I normally call it choke. Choke is called change of market structure. So once the higher lows of the market is broken, that's when you consider selling the market. So why this SMS high is called shift of market structure? Shift of market structure is when the market gave us a lower lows, and this is now your intermediate high, but the intermediate high didn't break the higher highs of the day. So that's why I wrote SMX/high. So that is what SMS means, shift of market structure high, but the high didn't break this high. So what you need to do is to draw your line. Understand? Is to draw your line, then wait for it to break the previous higher low. Understand? Once it breaks the previous higher low, then that's when you consider that the market is now on a bearish trend. You can see how I drew this. It break the first one and also break the second one. That's the way it normally does. So once it break the previous higher lows, then it gives you a lower low. Understand? It then gives you a lower low. Then what do you want to see? Before it gives you a lower low, before you consider it a lower low, you always want to see an impressive move. The candle that will break these zones will be a strong candle. When I mean a strong candle, it will always give you a Mazobi candle. So tomorrow or the next class, I will be teaching about candlestick for you to know how the candlestick works and types of candlestick that we have, both confirmation candlestick, reversal candlestick, continuation candlestick for you. So this is downtrend market. So let's begin. The downtrend market gives you a lower low, then the retracement point is your lower high. Understand? Your lower low and your lower high. Then it gives you a new lower low, and a retracement point is your lower high. So I have to shift this. So why do you consider once the market is giving you this lower low, is creating this lower low, is because it's breaking the previous low. It's breaking the previous lows. This is the previous low of the trend. Then it's breaking. Once it's breaking, wait for retracement. Then look out for your suspicious supply zone at your 50% or your 61.8 Fibonacci zones. So that is it for this video. So the next one I'm gonna give you guys is the ranging markets. You understand? The ranging markets by this drawing is the way it's called a sideways market. It doesn't move anywhere. It stays at a place. You understand? It doesn't move anywhere. It just stays at a place from up to down, from up to down. So always trade on a trending market without not trading on them. So this strategy that I'm about to give you, you can also trade it on your sideways markets and also uptrend and downtrend. So let me just go back. Yeah. So what's the confirmation? The next thing is the confirmation. You can't just buy, you can't just start buying or selling from anywhere in the market, even though you know the market structure as I taught you right now. So what's the confirmation? The confirmation is always choke. Market structure choke is what gives people or give us edge to trade. You understand? You always trade, as I told you that market break as I told you that choke, change of character, is what gives you an intent of reversal or continuation markets in our setup or in the age which I'm about to teach you. So always look out for this kind of setup choke, break of the previous low. Understand? So what do you intend to do when the market, okay, let's say that the market is still on uptrend, and for new confirmation as an uptrend, or you are trading a bullish market, you can still draw your trend line from your swing high. You always wait for break, the first touch, second touch, third touch. It can be neither fourth touch. Understand? Then wait for your break. Understand? So this is for uptrend. The first touch, second touch, third touch, and this is the fourth touch. Then the market moves, give us a shift of market structure, and then break. As it broke this trend line, it's also break the higher low and the second higher low, which gives us a choke. Choke means change of character to ride the market as a bearish move. Then what do you want to do? You draw your Fibonacci from the swing high here to the lower low. Understand? Once you draw it from the swing high to the lower low, then you look out for retracement zone at neither your 50%, or 61.8. okay, here is 61.8 and here is 50%. So neither the market can retrace 50% or 61.8, depends on where the zone is located. You understand? Depends on where your supply zone is located. Understand? Here can be your immediate supply zone that will reverse the trend. So from there you ride it to your target TP, which is you can target your TP from the lower high to your lower low. You can take partial profit, or you wait to the second TP, which is here. So that's the work of Fibonacci. Fibonacci is very good tools for trading and analyzing markets. So I'm just keeping it simple. The only fact about this is to just keep it simple. So what for the bearish trend, I have to draw the trend line for the bearish trend. For the bearish trend, this is the first touch, second touch, third touch, and fourth touch. Then you always wait for your break. So that not telling you, you confirm the always bearish trend gives you a trend line touch, either first touch, second touch, or fourth touch. This time around the market have changed. It always gives you a fourth touch before any reversal. So you can see the way I draw this is very neat and simple for you to understand. So what's the reversal point at this point? At this point, that's what you ask me. The reversal point of this point you'll be looking at for is your choke, which I'm telling you, these points are your river. You are looking up for something here. There is something you need to look at for once the market have given you a lower high or a lower low reversal. You can also write a retracement phase to your impressive move. It just depends for you once you understand the market. So let me show you what I mean by choke. So this is the main setup of this choke reversal pattern. This choke gives you what we call a first touch, second touch, and third touch, which we call 3D drive. This is called 3D drive. This 3D drive comes at the last leg of a reversal point. Maybe you have a supply zone or demand zone at your trend. I don't know whether it's, even though it's a ranging market or a downtrend or a uptrend, always wait to look out for this at your supply zone. First touch, second touch, then it enters into the zone. Understand? To manipulate them. Understand? To manipulate the retail traders. What I always teaching you here is smart money concept. Understand? I'm teaching you smart money concept. So I don't teach retail concept. It's only smart money that normally teach. So this is the main point. Understand? You'll be looking out for this second low. Understand that it created to be broken. Understand? So once it breaks the second low, then what you intend to do is to wait for retracement. Then on the retracement, we are looking at for suspicious thing around the zone, because the market broke structure, then came back again, it didn't respect, broke on a new structure, and also break the lower low structure, the lower high structure, sorry. Then what you need to do is to just wait for retracement at this zone. There must be something suspicious, maybe an order block, or we call it MPL level. MPL means maximum pen level. So let me write it down. Oh, sorry. MPL means maximum pin level. Sorry. So this is how it looks like. Sorry that I didn't got this. I have to leave it like this. So that's what you'll be looking at for in these higher highs, at the point of your higher highs or your lower lows, or your, let me say, okay, in a downtrend. At these points, you'll be looking at for this setup. Understand? At these points, lower high, you'll be looking at for this kind of setup. So at this point, reversal points, all these structures, once the market break structure, create a lower high, then you are looking out for this as a confirmation for entry. Understand? So that is it for this class. So in the next tutorial, I'll be teaching a lot. We have a lot of topics to cover up and give you, understand? It have a lot of topic to cover up for you. So if you have any question on this, just ask me. By tomorrow, we're also having a Zoom class on a new topic that I'll be teaching next. So always message me, ask question after watching this video, and also try to practice and backtest. Go to your higher time frame, 4 hours day one, to look out for this kind of setup. Thank you.